You must understand how to differentiate between reversal or retracement. If you do not know how to differentiate between reversal and a retracement, you will lose a lot of money. Example is you get in for a buy position and then you see price starts retracing just a little bit and then you get out only to see price go in your way. So you do not want that to happen to you. So in this video, we are going to discuss how to distinguish between retracement and reversals. So these are the two ways that you can use to distinguish between a retracement and a reversal. Firstly is market structure and secondly is Fibonacci. So let's dive into market structure first. So market structure looks something like this. In the uptrend, price is making your higher highs and higher lows, higher highs and higher lows. So at some point of time, it's gonna start losing steam, right? The uptrend is gonna start losing steam and it's gonna start to like maybe consolidate a little bit around here, starts losing steam, and then some more sellers come into the market and push the price down. And now price has just broke through the previous higher low. So if you guys can see right here, this is the previous higher low, right? So this is the previous higher low, this is the last higher low, and then this is the last higher low. So this is the previous higher low and price has just broke through the most recent higher low. So this is the first sign that tells us that price is about to reverse. But we do not want to sell yet because this can be a fake out and price can still continue going up even further. So what we want to do is to wait for price to come up to retest this higher low, to form some sort of lower high and continue going down like this, and this will show us that price has reversed and now it is in a downtrend, guys. It's really just as simple as that, guys. So how we know price is reversing is basically when price broke structure. Alright, and how price break structure is when price break through the previous higher low in the uptrend like this and then come back up to retest the previous higher low and form a lower high. So right now price is going to form your lower highs and lower low and just head back down like this. So this is what we count as a break of structure. So a downtrend will be the opposite. So remember guys, it only counts as a break of structure when price break through the previous higher low and come back up to retest it to form your new lower high before pumping back down. This is the only way where we can tell that, okay, this is actually a reversal and it's not some sort of retracement that will cause price to go up even further. Now let's apply whatever we just learned. So this is obviously an uptrend because price is making your higher highs and higher lows. So there's like a beautiful long trend line right there. So yeah, this you can draw like this little trend line, connect all these little higher lows, and you can see at this point it starts like breaking through the trend line. And what the price do, guys, it starts consolidating because this shows us that price is losing steam, right? A downtrend might be happening soon, but we still want to wait because we want to wait for price to break through the previous low, which is right here. This is the previous higher low. You can see price was making your higher highs, higher low, higher highs, higher lows, and then higher highs, and then there is no next higher low. You just come back down, retest this area. So this is the last higher low. So now we want to wait for price to break through this higher low and then we might enter for a sell. All right, wait first. So we wait. So right now you can see right here, it broke through the previous higher low that we have drawn earlier. So this is the higher low and price just break through it, but we do not want to sell yet because remember, it can be like a fake out and then it just poke its head back in and just go up like this. So we want to wait for price to retest this area to form some sort of lower high and then we get in for a sell position. So you can see which is what it did right here, guys. You can see it right here. Price went back up to retest, this higher low, and now it forms a lower high before price start pumping back down. So this is where we could have entered for our sell position somewhere around here. So that is how you guys can identify reversal by looking at break of structure. And as you guys can see, price just went down even further after price broke this structure right here. So the second way is by using your Fibonacci retracement tool. So basically, when price goes up like this, we know that it has to retrace to either one of these retracement levels, right? The 38.2, 50, 61.8, and 78.6. So if price goes out anywhere of here and then it starts going back up like this, that means it is a retracement. But if price goes up and break below the 78.6 level like it did right here, that means it is a reversal, guys. Okay, let me explain again. So basically, when price retrace to either one of these levels, either one, it is a retracement, okay? But if price break through the 78.6 level, break through it like this, it is a reversal. So like right here, you can draw like a little Fibonacci and drag it all the way up here. And then you can see price retraced to the 61.8 level before pumping up, right? So this was a retracement. This was obviously a retracement because price did not break below the 78.6 level. And then let's look at this one right here. Once again, pull out your Fibonacci, drag it all the way up here to this high right here, and then you can see price retrace. Okay, we are waiting for price to retrace to this 38.2 level, and then we can potentially see that it's a retracement, right? So let's just wait. And then you can see right here, guys, price broke through the 78.6 level, which is right here. Price broke through this 78.6 level. So this shows us that price is actually a reversal. It is not a retracement. Once price broke through the 78.6 level, it went down even further. You can see it just reversed from an uptrend to a downtrend. So that is how you guys can use the Fibonacci retracement tool to identify whether it is a retracement or a reversal. So another tip that I can give you guys is that look at the higher time frame trend. So if the weekly time frame trend is showing you that price is going down, like a beautiful downtrend like this, and then on a 15-minute time frame you see that price is actually going up like this, then guess what? Obviously that is a retracement, right? Because remember, the higher time frame trend is always stronger. So the weekly time frame will be so much more stronger than the 15-minute time frame trend. So make sure you guys still prioritize the higher time frame trend, no matter if it's your scalping, intraday trading, or swing trading. Just look at this, guys. Right now, the higher time frame trend shows us that price is in a downtrend. Price is making your lower highs, lower low, lower high, lower low. So we go down to the 15-minute time frame and we see that price is actually like going up like this. Guess what? That is obviously a retracement. Once again, look at this, guys. You can see on the weekly time frame, US 30 is clearly in a very bullish uptrend, right? So if you go down to the 15-minute time frame and you see red candlestick like this, then guess what? That is a retracement, guys. It's really just as simple as that. So those are the 3 tips I have for you guys to help you guys distinguish between a reversal and a retracement.